Brothers and sisters, did you see what happened in the old stock market today? It was as green could possibly be. The bears got absolutely annihilated, and that's exactly what I want to get into in this video. Why was the market so incredibly bullish today? And hey, P.S. I hope you made a lot of money. And also the major things to pay attention to for the remainder of this week, because we have a lot of other big things coming up on deck that could push this even higher. Yes, you heard me right. Or it could also prompt a pretty brutal U-turn. So I want to get into everything. Just put it on your radar of what you should be paying attention to, because man, oh man, is this some fun times. Now, obviously, before we get into all of that, if you enjoy this type of content, help me out, smash the like button. Don't forget to subscribe. With that being said, let's ride. By the time the closing bell went dingity ding 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 today, Tuesday, November 14th, the S&P 500 had notched the best day since April. Dow leaps nearly 500 points on soft inflation report. And for those of you who are a little bit more of a visual learner, like I said, it was as green could possibly be. This is a look at the S&P 500, and man, oh man, if you degenerately got yourself into some call plays today, congrats to you. Now, for those of you who want more of the specific numbers, the SPY up 1.94%, the tech sector, the Qs up 2%, Tesla ripping 6%, you have Nvidia that's up 2%, you have Rum up 5%. It was just green, green, green. Now, obviously, I want to get into all of that. I want to break down why we have such amazing stats, such as that Magnificent 7 index now sits 2% off its all-time highs, currently up over 100% year to date. I'm going to get into all of that. But before we do, I have to share with you one of the most astounding things I've seen on the internet in quite a while. And I promise you, you are not going to be upset if you watch this video. It's only a minute long. This went down in the Senate today.
Like he's self-made. Sir, I wish you was in the truck with me when I was building my plumbing company. Myself and my wife was running the office, because I sure remember working pretty hard and long hours. Quit the tough guy act in these Senate hearings. You know where to find me. Any place, anytime, cowboy. Sir, this is a time, this is a place. If you want to run your mouth, we can be two consenting adults. We can finish it here.
This is where internet drama spills over.
Want to do it now?
I'd love to do it right now.
Well, stand your butt up then.
You stand your butt up.
Oh, hold on.
Big guy.
Oh, stop.
You stand your butt up.
Hold it.
Stands up.
Sit down. Sit down.
Okay.
Bernie Sanders has to step in.
Actively.
Oh, okay.
Sit down, please.
All right.
Can I respond, Mr.
Hold
Chairman?
it. Hold it.
Hold it. Hold it.
We can't. No,
This is
I have
what
the
he
mic.
said.
I'm sorry.
This is
Hold
what
it.
he said.
You'll have your time.
Okay.
Can I respond?
Oh, no, you can't.
Just a gentle reminder that all levels of power within the US is absolutely filled with nothing but children. And now that I got to share that piece of absolute comedy with you, let's return to why the market was ripping to the high heavens today. And the reason for that is basically inflation. Or what I should say is inflation is coming in below expectations. An hour before the market opened today at 8:30 a.m. ET, we got the CPI report, the Consumer Price Index report. The expectations were 3.3% year over year, 0.1% month over month. And if you looked at core CPI month over month, the expectation was 0.3. Well, all those came in a little bit cool, a little bit lower than expected, 3.2, 0, and 0.2 respectively, which is good. That does actually mean that prices are continuing up, but just the rate at which they're going up was less than expected. So even though this isn't a massive win, it's a win nonetheless, and that's exactly why the market is going up. Inflation was flat in October from the prior month. Core CPI hits 2-year low. Once again, is this phenomenal? Are things deflating? Absolutely not. But we could kind of chalk it up to meaning that there's at least less pain than expected. 10-year Treasury yield tumbles below 4.5% on cool October inflation report. Yields down, bonds up, and bonds have been vomiting now for the whole past year. So once again, another sign of relief. And don't forget, as bonds go back up, that's going to be putting less pressure in the financial sector, which is when all those banks got into bonds, then bonds fell, giant hole in their balance sheet, and that's what caused some of them to blow up. So even if you look at the financial sector, ticker symbol XLF, you can see that there was a great relief there specifically. cooler monthly inflation report pushes mortgage rates even lower. So yes, there's not as much pressure on buyers right now, as in things are a little bit alleviated, but more importantly is what this means for the Fed fund rate. So the Federal Reserve, the US's central bank, their Fed fund rate sets the tone for all other interest-bearing things, including the interest rates on mortgages. Most likely, and this is what's being really priced into the market right now, we've hit the terminal rate, aka the peak rate of 5.25%. And probably coming in mid next year, we're actually going to start to cut that number, which will once again be alleviating those interest payments, especially on mortgages. And for those of you who still want to know what's specifically expensive and what's been coming down, here's the inflation breakdown for October 2023 in one chart. So this is everything in the consumer price index. And when we say core CPI, that's taking out food and it's also taking out energy. And it's really this core CPI that people have really been focusing on. And that's because other aspects within it are proving to be sticky, as in they haven't really been coming down. And that's specifically services and shelter. And granted, they are still kind of elevated, but they finally showed a little bit of weakness, a little bit of cracking, which is obviously giving a lot of people hope. Now, I do want to clarify. Does this mean that we've defeated inflation? Does this mean that we're A-okay? Absolutely not. As much as my crystal ball is working, as much as your crystal ball is working. Everything's a little bit of guesswork. And right now, we got some positive news. And obviously, the stock market is always a future-looking mechanism. So it said, hey, maybe they were able to pull off the quote-unquote soft landing. Is this a guarantee that they did? No. Obviously, month over month, I'll continue to monitor the reports and make sure we are still trending in the right direction. You could argue maybe this was a fluke, but also maybe it wasn't. And right now, we're obviously seeing quite a bit of optimism in the overall stock market because of its interpretation of what this means for the economy. Now, here's a fair question. Was everyone on this planet happy to hear the news? And the answer to that is absolutely not, because there's a lot of people who have had pretty serious bearish bets against the market saying, hey, this recent rally, it's BS, it's baloney, and we're going to come tumbling down. And with this newest push, we're seeing a lot of them get blown out of their position. Breaking, Michael Burry has closed his $1.6 billion S&P and NASDAQ short position for an estimated loss of 40%. Quick side note here, he didn't actually bet $1.6 billion. That's how much he would have had to pay if he exercised his complete put position. Yes, it was bearish, but it cost him more in the tune of $25 million, which, hey, a 40% hit. He still lost in excess of $10 million. So I'm not saying it was small, I'm just saying he didn't lose $800 million. But he's also not giving up quite yet. Michael Burry reveals new bet against chip stocks after closing out winning market short. I'm really confused as how CNBC came up that bet that I just covered was a winning short play, because if you look at the time of the entry and the exit, the market was higher and he had puts, so that doesn't really make sense. And hey, maybe if you have the answer to that, let me know in a comment below, because I was very, very confused. But anyway, as to his new trades, he's betting against a very hot sector. I'm talking about semiconductors. I'm talking about those fancy schmancy processing chips that are used in the world of AI, data centers, crypto, and a lot of high-end gaming. He's betting against popular names such as Nvidia, AMD. Burry's Scion Asset Management has a put position against 100,000 shares in SOX, SOXX. The exact value of the options position is not known, but the notional value of the SOX shares involved was more than 47 million at the end of the quarter. For the sake of thoroughness, here's a look at what's currently in the SOXX, the SOX ETF: AMD, AVGO, Nvidia, INTC, Qualcomm, Micron. As you can tell, a lot of the most popular semiconductor names. And if you look at the market today, this sector did particularly well. In fact, Nvidia almost hit a new all-time high after it was already at a super elevated level. So even on this position, I don't think Burry's too happy. Moving forward, there are a lot of major things you should be paying attention to. I hope you're watching this before Wednesday, November 15th, because an hour before the market opens, we get another key inflation update, this time the PPI. Today, we got the consumer price index. Tomorrow, we will be getting the producer price index. And on top of that, retail sales. So another key indicator of what's going on in the world of inflation. If this comes in cool, if this comes in a little bit light, as in the numbers lower, I'm looking for the market to continue up, and obviously vice versa. If the inflation report comes in high, if it comes in hot, I'm looking for the market to actually take a little bit of a hit. And then later on this week, Friday, November 17th, we're going to be getting the CPI report, but this time for the Eurozone, not for the US. On top of that, we're also still in earnings season before the market opens tomorrow. Target, Advanced Auto Parts, JD, and TJ Maxx. Later on this week, Alibaba, Walmart, Macy's. So yes, most of the major earnings season is already over, but there's a couple ones that I just thought you would be interested in. And I also want to let you know, Kohrs.locals.com, that's where you can get access not only to the Goonie Discord, but also this newsletter. The newsletter part is free, and you can actually get free access to the Discord if you use the code Goonie, Goonie. I break down the previous week, the upcoming week. I let you know of all the major macroeconomic events, all of the major earnings I think you'll care about. But for this point, I want to let you know about seasonality. For Wednesday, November 15th, the day is absurdly bullish. PPI days also leaning slightly in the favor of the bulls. So when I put the seasonality together of how this day has performed over the past 25 years, the recent CPI report, the upcoming PPI report, I think there's a pretty decent chance that the bulls will continue to dominate. Now, is that obviously a guarantee? No. At the end of the day, you could predict whatever you want, but I'm going to trade whatever the price action is. But I just want to put a couple of the moving parts together for you just so you feel a little bit more comfortable with what's potentially going on in the back end. That's what I have for you in this video. I appreciate you stopping by. I'll catch you tomorrow. Feel free to stop by on the stream or just catch the update when it comes out after the market closes, pretty much every single day of the week. That's what I have for you. Thank you. I'll catch you in the next one.
Have a beautiful day.